Imagine that the loud boom you hear in the economy is only a thin stage made of painted wood, ready to fall the moment someone leans on it. Newspapers brag about record profits, endless job openings, and fearless forecasts. But a quiet voice inside reminds you that endless good times never last in the real world. That voice, forged by decades of market history, warns you to prepare before a single headline flips, cheers into sirens. A lifetime of freedom can be won or lost in the brief heartbeat when certainty turns to panic. So listen closely, because it might already be too late. Start with the firmest truth in money. A share is simply a ticket to future cash, not a flashy cartoon that dances on a screen. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions. Many people forget that during bubbles, and remember it only when their broker calls for more margin. Owning shares means you earn when factories hum at dawn, apps renew every month, and patents guard profits while you sleep. If those money-making engines keep turning while prices fall, the space between true worth and sticker price widens, and that space is freedom measured in years of your life. To understand it better, picture walking into your local store and finding bread, soap and batteries all at half price for no clear reason. You would not storm out angry because the tags were higher last week. You would grab another cart, maybe two, and fill it as possibly you can. Apply the same clear thinking to stocks. When fear drives calm buyers away, strong companies land on the bargain shelf. Shoppers who treat the market like that sensible storekeeper sail through storms most newcomers never imagine. But survival alone is not enough. True success means walking out stronger than before. To win, you must know how booms and busts work together. Years of cheap money tempt families and firms to borrow far more than they should. Executives chase growth at any cost, and day traders brag about charts instead of customers. Debt rises like a slow tide until one spark, a supply shock, a policy blunder, or a sudden political scare, flips the mood. Cash dries up, bids vanish, and yesterday's heroes plunge through floor after floor on nothing more than raw fear. Every major crash, from 19th century railroads to the sudden 2020 plunge, followed that path. Easy times, rising debt, sudden trigger, deep fall. Economists call the key instant a Minsky moment. Veteran traders simply say it is certain. We cannot name the next trigger, but we can measure the odds and pile up cash. That preparation starts with 5 solid cornerstones shaped by a century of lessons. And remember that the 5th is the fundamental one. 1. Invest, do not gamble. 2. Judge assets by the cash they will earn, not by shiny stories. 3. Walk away from puzzles you cannot explain in one short sentence. 4. Remember that price is a daily vote, but profit is the final weight. 5. A wonderful business bought at a foolish price quickly becomes a foolish investment. And staying on the subject of business, if you want to start one at zero cost, join our free Telegram community with the link in the description, where I will give you my step-by-step strategies. But I will tell you more about it later. Planning beats guessing every time. While markets are calm, open a spreadsheet and list 10 companies whose products you see and use each day. Read their reports and test 3 paths: safe, normal, bold, on sales growth, profit margins, and the return you need. The safe path sets your buy price. Anything higher stays ink, not action. Set phone alerts so that when panic drags a ticker below that number, your pocket buzzes like a starter pistol. Park spare cash in a high-yield account until then, so your dry powder earns interest instead of gathering dust. Funding this plan needs steady rhythm. Drop a fixed amount into a broad index fund every payday. That blind habit ignores moods and rides the long, upward slope of human progress. Add a second rule. When a company on your list sinks below your safe value, invest a set multiple of your usual deposit. The base keeps you in the game, the push turns crisis into a springboard. This simple pair protected and grew wealth through the dot-com crash, the deep 2008 wipeout, and the sudden 2020 slide. Cold numbers alone, however, will not calm a racing heart. Headlines about layoffs, bank failures, and trading halts will jolt your nerves. Fight that shock with memory. Think of Microsoft in the early 2010s. Profits climbed every year, while critics shouted that the brand was finished. Think of Meta at $88 in 2022, later soaring past $600. Facts beat feelings, and patience turns panic into profit. The same tune played for Standard Oil, for Apple, and it will play again for today's so-called lost causes. Step back even farther. Public debt sits at record highs, supply chains groan under global tension, office layoffs spread behind polished press notes, and inflation still refuses to rest at target levels. Central banks promise soft landings, yet every promise depends on forces they cannot fully steer. The lid on the pot is shaking. No expert knows which bubble will burst first, but pressure keeps building until it vents, and that vent turns hesitation into fire sale prices for people who stand ready. So build a clear, sharp battle plan tonight. First, note the cash you have, the amount you can save each month, and the biggest account drop you can handle without losing sleep. Second, give every company on your watch list a floor price based on strict, not heroic, numbers. Third, instruct your broker or app to alert you the instant real quotes hit those floors. Fourth, step back. Read fewer breaking headlines and read more annual reports. Fifth, when signals flash, act inside your limits and leave ego at the door. Execution, not elegance, wins the reward. Some skeptics claim the entire market could fall to zero. If the world sinks that far, the paper money in your wallet will turn into wallpaper, and owning slices of working assets will still be the better choice. Every crash so far, from the panic of 1907 to the mortgage mess of 2008, eventually reversed and climbed to new highs. Time recasts yesterday's terror as today's footnote and tomorrow's foundation for bigger peaks. Markets rise because people keep inventing, trading, and solving problems. But you cannot wait for the rebound and then brag about foresight. Stories of great fortunes always include bravery, shown while streets crack and sirens howl. Fortune's ticket must be stamped in the dark. Pay that fare with planning, cash, and quiet certainty. Let party chatter chase meme stocks. Let influencers promise overnight riches. You will be the one reading balance sheets on a slow Sunday, fine-tuning discount rates, and waiting without fuss. To keep your course steady, install simple guardrails. Never chase a price spike after flashy news. Never double down on a business you do not understand. Never sell just because a neighbour boasts about gains elsewhere. Never broadcast your trades for applause. These rails keep ego off your desk and remind you that risk is what remains after you believe you have seen everything. Now, the growing tension needs one clear command. The once-in-a-lifetime chance you want is not hiding in a secret chat room. It waits in the discipline you build before the curtain falls. Tonight, finish the watch list. Tomorrow, automate the transfer. The next day, read one income statement instead of another episode of a show. Trade impulse for structure, and you will smell opportunity the way a sailor smells some storm wind rolling in from dark water. Here is the plain truth. The next shake-up is coming. Its exact date is almost useless trivia. Those who treat shares as tickets to future cash, who keep dry powder ready, and who act while others freeze, will own the seeds of the next boom at pennies on the dollar. Be one of them. Write the plan, fund the plan, trust the plan, and when the spark lands, walk forward through the smoke, instead of stumbling back with the crowd. Finally, turn resolve into motion before the market tests your courage. Set the bank transfer to your broker, label the spreadsheet tab "Fire Sale Targets," and step away until the first alert chimes. When that ping arrives, next month or next year, do not ask the crowd for comfort. Move. Buy slices of real cash flow, not hype. Then close the screen, take a long walk, and let compound growth do the heavy lifting you once assigned to hope. Master this simple loop and the next wave of panic will feel like a golden invitation rather than a threat. The stage is set, and the choice, as always, is yours alone. And the best thing you can do right now is to create a budget for investing. And to do that, you can join our free Telegram community using the link in the description, where I'll give you my step-by-step strategies on how to start a faceless YouTube channel without knowing anything. And to prove it works, you can watch this channel, which is the ultimate proof. If you found value in this content, subscribe now and hit the like button. Let me know your thoughts in the comments on this topic, and I'll see you soon in the Telegram community. I'll wait for you.